Welcome to the Takeoff Experience, where I sit down with highly driven people to talk about their journey, their failures, and their successes. If you want to take off in your career, your business, your finances, or your mindset, then this podcast is for you. Welcome back to the Takeoff. We got a special guest blessing us in the booth this week. So B is a project manager and a financial coach, bringing you some dope and digestible financial education. I hope you're all ready for the gems that are ready to be dropped today. How are you doing today, B?
Hey, I'm good, thank you. How are you?
Yeah, I'm good. We both were saying like before, like it was like a really, really long day, and I think we both have jobs, and we're both also content creators. So yeah, it's just like it's such a mad day. But yeah, so I always ask the same question. I always start the podcast with the same question. What is your worst financial mistake?
Okay, I would say getting into debt from university and basically being in a cycle of debt for the next 15 years. Yeah, that will do it.
Really?
Yeah.
Wow. Okay, that is interesting. So, like, at the end of the 15 years, okay, how did it start? Like, what happened? Because I know university for a lot of us, I think I got into debt at university too, and I think pretty much most of us have. But yeah, why did that happen?
Yeah, so first when you start at university, they're throwing the credit cards at you, thinking you think you're free money and this is how it starts. So out of university, I got myself out there. That wasn't a problem, but I just got used to living off my credit card, used to, living off, living out of my means, and just basically doing a cycle of, okay, I'll use my credit card. It'll get to a certain limit, and I'll be like, okay, I'm gonna do a loan. Like you do, like trying to think of the word, a consolidation loan that you transfer your credit card to or whatever to a loan, so it would last a year or whatever, and I'll pay little interest, but I'll just keep doing that cycle of using my credit card and not having sinking funds or anything in place, and just put it to a loan, and it built my credit score up real well. But it was like I was just used to doing it. You know what I mean?
Yeah. Wow. Yeah, honestly, I think I went through the same thing. I think I was living in my overdraft after uni for years until I decided to like stop it. And then after 15 years, why do you say to yourself, enough is enough? Like, what brought on the change?
It wasn't like a drastic thing where I said enough. It was like 3 years ago I was still in debt. It wasn't like it was a big debt on my shoulder. It was just like I kept doing the same thing of putting it on, living in my overdraft or whatever it was, use my credit card, putting it on a loan, and then every couple of years just repeating a cycle. So it wasn't a big burden to me, but it was like, why am I living like that? But then you stop and think, okay, I need to I got myself a bit more financial literate about, the situation. I was like, why am I doing this? I don't need to do this. It was just like lifestyle creep, because obviously in the beginning you start with a certain wage. My wage has gone from, I don't know, at that time, 20,000, 18,000 to a lot higher over the years, but you still end up using your credit card and being in the same debt. So I was like, what really am I doing? Like, I got a lot of goals. I'm not really spending time and thinking about what I want to do. So that's how it kind of like, I just stopped myself. I said, you know what? It's time to change.
Yeah. That's the thing. And this is what I say to like a lot of people. And I think like, a lot of people can relate to this. I think everybody just sort of gets to a point where they're like, you just want that change. It's all well and good, like, people like us saying, oh, do this. But if you don't want the change, you're not gonna change, right? You're gonna have to say to yourself, look, I've had enough. I want to live a completely, different life. This is what I want to do. And I guess you got to that point. Right. Very, very interesting. Very, very interesting story. So yeah, can you give us a bit of insight into the day and life of B?
Okay, so B wears many hats. So I'm a wife, I'm a mother of two, project manager, money coach, and a gym rat. So like my
gym rat.
Yeah, I love the gym. So my average day would be like probably, get my daughter ready, dropping off to school, do my day job, cooking dinner, rushing to my spin class, and then like going in the sauna afterwards. So that's probably like my average day during the week. Yeah.
Wow, that's insane. So I love the fact that you said your gym rat. I've never heard
Oh
of.
yeah.
I think I've heard of that term, but I've not like heard many people say it.
No,
That's
I love it.
crazy. So yeah, so you're a project manager, you're money coach as well, which is crazy, and we're gonna delve into that, like why you went into that. But let's take it back a bit because you mentioned that to me offline that you're Nigerian as well. Are
Yes.
both your
Both my
parents Nigerian?
parents are Nigerian born and
Okay.
raised, and I was born
Raw.
here. So,
Okay.
got a mixture of Nigerian and British culture. So, yeah.
Wow. Have you been back to Nigeria
Yeah, a
recently?
few times. When I was little, and then obviously my
Yeah.
brother that lives over there, and not obviously, but
Okay.
my brother lives over there, and he got married,
Okay.
so we went there, and like every so often I would go.
Okay. Wow. And you go every often. What do you think of it?
I like it. Well, my mum's
Yeah.
got a property over there, so it's not it's good for us to keep going and see how it is.
Yeah.
It's a different way of living, isn't it? So
Yeah.
I enjoy it, and I love anything with anywhere with sun. Like that's me. I'm not
That's the
made to live
thing.
in
They've got the sun in
the
it. Yeah. I know it's crazy. It's like it's so warm there. Did you say you can't wait to leave the UK?
No, I said I'm not made to live in the UK.
Yeah.
I don't know why I'm
Yeah.
here. No, I shouldn't say that. But I
Yeah.
feel
No.
like I'm meant to live
Mm,
somewhere in the sun,
yeah.
treading water with alcohol in my hand. That's what I'm meant to be doing.
You know what? I fully hear you. I actually fully hear you on that because yeah, I think me and my fiance we're actually thinking we're not sure yet, but we do if we're gonna move, we want to move to somewhere where at least it's warm, right? What's the point of moving if you're
Yeah.
gonna get the same kind of weather?
hmm
Yeah, that's
I'm feeling you guys on that one.
oh man, no, Nigeria. Yeah, so I went to Nigeria recently as well. Last year November, and the plan is I want to go like every year
hmm
at least because I just think it, like you said, it's just a different type of lifestyle and just a different type of living and mindset out there. So yeah, I think it's just good to just see that. I
Yeah,
think sometimes we get a bit too comfortable here in the UK and we forget
exactly.
what it's like there. So yeah. So you mentioned that you went to university. What did you actually study at
I studied
university?
computer science.
Really? Computer science? That's
Yeah.
interesting.
You don't really get women that do computer science because at the
No.
time it was like a more of a man's field. Like well, it's they're getting more women inside the field, but it's more
Yeah.
of a man thing. So people were quite surprised when I say that I did computer science. But yeah,
Yeah. That is a surprise. I mean, you don't often hear like I mean, more black people are definitely doing computer science, which I think is great because the technology field is just gonna only grow
hmm
larger. Why did you choose computer science?
you know what? It's by teacher. Yeah, because in my A levels I did like maths. I loved maths. I
Yeah.
did science, and then one of my teachers said, "Get into computer science. There's loads of money." I was like, "Okay."
Okay.
Okay. So I just ended up doing it, and I actually liked it.
Wow.
Yeah.
That is crazy. Oh my gosh. So are you telling me you can code then? Are you a coder
I
or
used to. So back in the
okay.
day, I used to be like, doing some C++ and HTML coding. That the little
Oh
bit of some, but that I can't do anymore.
wow.
Yeah.
Mad. Oh my god, that's so cool. You see, I want to hear more about this now. So okay, so you went to university, did computer science, and then like, was your first job in technology as well, or was it something
So
else?
during and after, I was still
Mm.
working in Curry's in sales. So
Okay,
like,
okay,
and a lot of it was sales of technical stuff. Keep laptops and PCs and that kind of stuff. But I
yeah,
didn't really know really much about it. But after
okay,
university, I went straight to like doing a trainee IT support officer, which was
okay.
really like supporting PCs, taking them apart, fixing them,
Wow.
kind of thing. Yeah,
Oh wow. So
yeah,
you're proper techie then.
yeah. Because I've gone from first line, second line, third line, proper
Oh my
techie, and
gosh.
now I just do IT project management. I don't even touch anything anymore.
Oh my god, that's
Yeah.
crazy. That's mad. Like, and I love the fact that you said curries because do you know what's funny thing is that I was still working. I was working at Three, right, the
hmm
mobile provider network, and I was working there for like I think my second and final year of uni, and then my masters as well. I think for maybe like I think actually maybe the whole year I might have been working there as well. I'll just go there like on weekends.
Mm.
And yeah, that's what got me into technology, actually working at that store. And I was like, actually, you know what, I don't want to do like a law degree anymore. I want to go into technology. And
Really?
that's how I kind of got into it as well. So yeah, no, I think you learn a lot from it. People don't really like realize, because when you're having to sell all this stuff, you have to learn like what the specs are and all that
Yeah.
stuff, and it's a lot. Like, so
Mm-hmm.
yeah, wow, that's so cool. So okay, so you did curries, then you said you did first line, second line, then you became a project manager. How long have you been doing project management?
So I've been doing project management for about 2.5 years.
Okay, it's intense, isn't it? Being a project manager.
Yeah. In the beginning, I was like, oh God, what have I got myself into? But now you get used to it. Like, but yeah, it's a lot of work.
It must be because so I'm by trade. Most of my career I've been a business analyst, and now I'm a product manager, and I know what it's like for a project manager, like how. And you guys get like all the rap as well. Things don't go well. All
Yeah.
the budget stress and all the project timeline stress.
Hmm.
Oh my gosh, that's crazy. But like generally, do you're enjoying it, right? Like,
Yeah, I am, and I work in the NHS, so it's not
okay,
as much pressure you'd get,
okay,
from private companies, because with the NHS they can be a bit more lax when it comes to time
okay,
constraints and things like that. So it's not too much pressure, but I'm enjoying it. Yeah.
okay. That's good. Wow, that's good. And the NHS as well, which is it's a massive. I know it's public, but it's massive. One of the biggest
Hmm.
companies, if we can call that, into it as well. It's one of the biggest companies out there, definitely. And I'm sure you're getting like a lot of experience from it.
Yes.
Um, in terms of like, so you're also a financial coach. Why did you start your side hustle as a financial
So it
coach?
kind of it started off like, obviously wanting to help my parents. I don't know why.
Mm-hmm.
Like, I wanted to help my parents because obviously the financial thing, we didn't really talk about it, and I wanted to
Mm.
learn myself. And then I started up like a WhatsApp group, and like between my friends, and we were doing it. And I thought, you know what? A lot of people in this situation, like, why don't I start an Instagram page and try and
Yeah.
like motivate, inspire, and educate people on it, because
Mm-hmm.
they don't teach you those kind of things in school. So
Yeah.
that's like kind of where I started from.
Yeah, and it's crazy. I'm glad that you managed to coach your parents. I'm struggling to do that. Well, not struggling. I think they will like. I think I'll have time to do it. I think I'm convincing them slowly. But how did that conversation go? Was it like awkward to say like, "Mom and Dad, like,
It
let's
was,
talk about
well,
finances now and do something about it"?
because obviously, like, coming from a Nigerian family, they don't really talk
Mm.
about that at all. Like, well,
Mm.
mine didn't anyway. So we didn't really talk about in depth, like personal finance and how much you earn,
Mm.
and what kind of situation you're in. So it was kind of hard to broach in the beginning, but then you've got no choice, because my dad's still working past the age of normal retirement, let's say.
Yeah.
And like, there's things that you have to put into place, like, to help him, because sooner or later he's gonna need to start working.
Mm.
So it was kind of easier because he had no choice.
Yeah.
Yeah.
Okay, that makes so much sense. Like, I'm gonna have to come and get some pointers from you on how to navigate that conversation, because it's such a tough conversation to have. And I love that you said the fact that he had no choice, so
Mm.
he was willing to change. And it's crazy that you say like this is not something we talk about, because it's true, we don't. Like, if it's like about making money, I think, or like properties, I think everybody's comfortable having that conversation.
Yeah.
But as soon as it comes to like how to manage your money, debt and all this sort of stuff, people shy away from it. They don't even want to talk about it. Like, it's
Yeah.
let's just ignore it. It's not happening, kind of thing. And it's just, yeah, it's not a great thing, actually. I think I think talking about it, being comfortable talking about it, it's so much easier if you
Mhm.
actually do it. Because I think a lot of people, they get so like, they just run away from it. But I feel personally, if you talk about it, it's easier for you to deal with the situation. So
Absolutely.
wow,
It was kind of a
okay.
really eye opener because like when after I started doing this, you talk more of your siblings as well, and you're like, oh, I'm in debt. Oh, you're in debt. You was in debt. Oh, you know what I mean? Like, you're like, okay, why didn't we talk about this before? Like, why was it so quiet? Like, why did we keep it quiet and suffer in silence?
Yeah.
It's like, a platform really to just for people to be comfortable to talk about and get used to talking about money, really.
Yeah. No, I love that, and I love what you do on Instagram and what you represent. There's definitely not a lot of black women talking even about investing. Like it's like it goes down, right? Like even just talking about finance and okay,
Yeah.
finance, personal finance in general, right? I think everybody else is comfortable with most stuff, but when it comes to like stocks and crypto, which we're gonna touch on today, if we got some time, we'll mostly talk about. Actually, today we're gonna focus mostly on stocks, and then another episode to
Hmm.
focus on crypto. A lot of women are not into it, but I'll ask you that question a little bit later. Okay, so what kind of aspects do you focus on with your one-to-ones?
Okay, it's more really like budgeting and investing. So I've got two one-to-ones.
Mm-hmm.
So one's like introduction to personal finance, which is like budgeting, saving, tackling debt and things like that. And one is
Mm-hmm.
intermediate stock market investing. So the one with the personal finance, I think the major one is budgeting. People don't,
Okay.
know how to budget. There's so many different budgeting styles. So people need to get used to what works for them and just incorporate it so
Mm-hmm.
it's natural. So that's I
Yeah.
think that the most of my ones for personal finance are like concentrating on.
Okay. Okay. I love that. Yeah. I think I like that. I think the budgeting is I said this in a video years ago. I feel like budgeting central to everything. Once you get that right,
Hmm.
pretty much everything else, of course, investing is its own beast,
Yeah.
but if you get that right, you're pretty much enabling yourself to do whatever you need to do. If you want to invest,
Hmm.
yeah, you can go and do that. If you want to be able to save for a certain thing, you're gonna know how to do that because you
Exactly.
understand how to budget.
Hmm.
So, or if it's emergency fund, or if you want to get yourself out of debt, all of those things surround yourself around a budget. If you don't
Hmm.
have that, then it's gonna be difficult to do any of
Exactly.
that. So yeah, I completely agree. Like, wow, that's so cool. And what areas, because you kind of mentioned it, you said budgeting. Is that the areas that most of your clients struggle with? Mostly,
Yeah.
or
So
investing?
budgeting and investing and getting out
Okay.
of tackling debt, basically. Yeah, a
Okay.
lot of
And
that's the
tackling debt.
main areas.
Yeah, that those are like the three whammies. Honestly,
Yeah.
it's like the three: debt, budgeting, investing, right? And
Yeah.
it's like if you get that right, you're good. Like you're good.
Hmm.
And you know, with budgeting, because we did an episode on budgeting, and I think a lot of people think budgeting when you have to budget, it's quite restrictive. But I don't
Hmm.
find budgeting like that. I just the way I see it, right? I just see budgeting as okay. I'm gonna make sure I've got like all my essentials paid
Hmm.
for, right? Okay, I'm also gonna save this amount. Yeah. Okay, cool. At that point, I can then decide what I want to do with the rest of the money. That's how I see it as. It's just like giving you a full picture of what you're doing, rather than I'm like not allowed to have fun. I'm not allowed to do anything. So yeah, I do find it quite interesting. Okay, so I wanted to start going into the stock market because you invest yourself.
Hmm.
So I know that you're advocate for building wealth, but what does it mean for you?
I'll say like building wealth is, the process of generating long-term income. And for me, it means like passive income. So I don't have to really be thinking about it. When I'm older, I don't want to be working and doing all this, creating all this active income that I've got to do
Hmm.
to pay my
Yeah,
bills. I want to be
yeah,
able to generate passive income and live life on my own terms. Really, I don't want to
yeah.
be a slave to work, which is kind of
Slay.
kind of what I feel like I am now.
Yeah.
Yeah.
I know what you're saying. I completely get what you're saying. And it's the funny thing is, if you decide, like, look, I do want to work up until 60, then you've got that choice, right? So it's like
Exactly.
having that choice, right? Right now,
Yeah.
it's like we don't have a choice. We got to do
Exactly.
we got to do it. No choice. You got no choice. But I think having a choice is nice because it's like, okay, if I do decide to work, or if I want to volunteer and do something completely different,
Hmm.
it doesn't matter how much salary I need to have. I can do whatever I want, whether that's teaching abroad or something else, whatever it is. It just gives you that flexibility to do that.
Exactly.
Yeah.
I don't think I want to, I'm not the person that wants to retire early. Like, I still want to be working, but I want to have a choice of what I do. And, when I go on holidays, nothing to ask somebody when I can, I'm going to you to ask you when I can go on holiday. Like, that's mad.
Yeah, man. I never used to have a problem with it, and now I'm starting to have a problem with it. And I think it's because I'm getting older. I'm starting to have I'm now asking you, can I take time off for my wedding? Can I take time off for me to go on holiday? Seriously,
and they could actually say no, like,
yeah,
you know what I mean? Like,
yeah. And some people will say no. It's actually mad. Like, no, you're not allowed. What? Oh my god! Like, we're not children anymore. But yeah, no, it's it's crazy. It's actually quite crazy. But yeah, no, I completely agree with that, and I completely agree that passive income is super important. Of course, passive income doesn't come overnight. It's something you have to work on over time. But if you can start off really small, and it can start snowballing over time. Like for instance, with me, like my dividends. I got one of my dividends yesterday. I was it's not a lot, but it's like £4. I was like, oh wow, this is cool. Because it started off like less than £1. I think it was like 50p or a few pennies. And like, wow, it keeps on going up. And like, wow, it's £4 now. Okay. By next year, maybe it's £8. And then the following year, £20. And I'm like, that's how it will just keep on reinvesting it. And I'm not really doing anything there. It's just, they're paying me. I'm reinvesting it back. And yeah, it's doing that work for me. So yeah, no, I completely agree with you. I think for me, building wealth it's pretty much a similar thing. I definitely want to have that financial freedom. I want to retire my parents as well, and help them live the life that they want as well, and have that choice. And for me to be able to do that, and also my kids in the future, to do whatever they want to do, so I can support them in any way. That's what it is. That's what it means for me. So yeah, I think we're definitely aligned on that. So so today we wanted to talk about the stock market, but I like to always break things down before we go into it. So I wanted to understand from your point of view, what is the stock market?
So the way I see the stock market is like a network where companies list their share on an exchange. So investors can buy and sell. I kind of think of it as like an auction house, so we're a safe and regulated place where buyers and sellers can, trade investments. That's the way I see it. Yeah.
Okay. Yeah. No, I love that definition. I don't think I could have, and this is why I like getting other people's perspectives that invest in the stock market, because I think sometimes when you do a search online, it has these really complex terminology, securities, and all of this stuff, and people are like, what is all of this stuff? And they get very overwhelmed. So yeah, I really like your explanation. And how did you start investing in the stock market yourself?
Okay, so since my kids are born, I've always had been investing in the stock market in some way. Because
really,
my son's 14, so I had a child trust fund for him because that was years ago. And then my daughter's 6, so I did a junior ISA. So I always invested for them. But it never quite kicked in my head that like I should be doing it for myself. Like, you know what I mean? So probably about 3 years ago, like obviously just before the pandemic, the pandemic started, playing around with platforms, learning about stocks and shares. As I said, I did a WhatsApp group with my friends. We kind of like talk about it, discuss what we were learning, and then the pandemic hit, and then it was like, there's a chance here for me to make money, because eventually it will come back, isn't it? So I'm playing around with it, thinking, okay. And I just got into it, like, mostly with individual stocks in the beginning. And I was like, okay, I'm trying to be more diversified, do my research and things like that. And I started going to more index funds. But that's how it really started.
Okay, wow, that's so cool. And I love that. And it's crazy that you said that you got a junior ISA for your kids, and then you got a trust fund, which I know about the junior ISA. I don't know much about that, like the details, and I don't know nothing about a trust fund. Like, what made you, like, how did you get into that? Did you speak to a financial advisor about that? Was that like something that you heard from like a friend?
I'm going back now. I'm showing my age. My son's 14 years, so that was originally it was a child trust fund, and the government gave you I can't remember how much it was, £250 or £500 to invest for your kids. This is back in the day when
What?
they was giving away money. Yes.
Oh my God! What? Of course, this doesn't exist anymore.
No, it don't
clearly.
exist anymore. So they were giving you that gave me. So I was like, this is free money. I need to figure out how I want to invest it for my child and how it's going to work. So
Wow.
like there was like certain banks that were offering child trust funds at the time, and as I was looking into it, they invest it for you and you pick like some kind of stocks and things like that. So that's kind of how I started doing it. And obviously, if my son's got it, my daughter's definitely going to have it. So it's automatic. When she was born, I automatically, at that time, it was called the Junior ISA. So I automatically did it for her as well.
That's crazy. Do you know if they have anything similar? Maybe not the same amount.
I don't think they give away any money nowadays.
They're like, we're done. We're not giving any more money. The freebies. Wow. Gosh, that's a shame. That is a shame. Which is
50 or whatever it was at the time.
That's a lot of money. That's actually like a lot of money. Like that's a decent amount of money. Like invested. I don't know like off the top of my head, but that's gonna definitely turn into like a huge amount of thousands.
And what I did is from they were born, I put my own direct debit. So their child benefit I would automatically put in there because for me, I thought it's free money. It's not for me. It's for them. So I would put that automatically in their accounts.
Wow. So you kind of was just always in the investing mindset already. You kind of trained yourself. So I'd imagine when it got to you, it's easy because you're already doing that.
Exactly.
Wow.
Yeah.
And this is what we say. We did an episode as well on good financial habits. And this is what we, I guess that was the point of the episode, right? Was that when you have develop these good financial habits, they kind of translate to everything, right? And it's just like, everything's related in a way. Like, for instance, with the credit score thing, a lot of people, they're worried about their credit scores. But if you manage your money well, you have an overdraft, you have a credit card, and you manage those well, then your credit score is going to be good. If you don't manage it well, then it's not going to be good, right? All of these things are all linked, right? And then that prevents you from getting a mortgage, that prevents you from getting a loan, and then you're not then able to invest because you can't manage your money. So all of these things are linked. So wow. So you already had like the mindset already for it. So you just needed to do the transition to do it for yourself. Wow, that's it. So as we were talking about before, so I was mentioning that I don't see a lot of women investing. I feel like more and more are investing, and pages such as yourselves are encouraging more women to invest. But why do you think like a lot of women don't invest?
I'm not sure really. Maybe it's because women, I'll say some women are more risk averse. So they don't really have the knowledge or the confidence to get into investing. Maybe, I'm not really sure, because before that, obviously I did it for my kids, but I really didn't think anything of it.
That's good that you didn't. So there was nothing that put you off it doing it yourself?
No.
Okay.
But for me, I've never really been shied away from a challenge. I think I've always been one to try it first, or to get used to it. And then if I don't like it, I don't like it. But I'll try it out.
No, I completely agree. I know investing can be daunting, and I know like the finance industry generally is like male dominated. I think even amongst like when you see like people talking about investing, again, it's like quite male dominated, although that is starting to change and you are seeing more women investing. And I think everybody personally should invest. It's an opportunity for all of us to start doing it. So to my women listeners, please do follow B check out her content. If you align more with her content and you're more comfortable with that, then definitely start getting investing, because B does it and B's comfortable with it, and it, but no, I do get the risk averse thing. And the interesting thing about like the risk stuff is that with investing in the stock market, you can still minimize your risk as possible by investing in index funds and investing in exchange traded funds, ETFs, as well, because they're more diversified. Or you can use like robo apps, right? You've got all these great robo apps out there as well. And there's not been any crazy news out there to say, oh, been this scandal, these people have lost this amount of money. So yeah, generally in the long term, the stock market is known to be fine. But I wanted to understand, what do you personally invest in yourself?
Okay, this is where I'm going to insert that this is not financial advice.
Okay, yeah, of course it's not. No, it's not financial advice. Yeah, no. Yes.
But I invest majority of my portfolio in the FTSE Global all cap index fund.
Okay,
and that's my main one. And then the rest of them is like individual stocks and crypto. So Apple, Google, Tesla, Amazon, Alibaba, Facebook, Coinbase, Etsy. And then when it comes to crypto, Ethereum, XRP, ADA, so Crow. So those are really what I'm investing.
Wow. You know what I think, right? And I like your picks. They're very interesting picks. Very, very strong picks. I'm also investing in Alibaba. They're not doing well right now. I'm also invested. And I know we both know the reason. This is not a political podcast, unfortunately, so I don't talk too much about the politics side of it. But of course, the politics side of it is impacting Alibaba stock, unfortunately. They say, politics and the stock market shouldn't go, but these days, I don't know if it's because of the news, politics is having a lot of impact on the stock market right now in the short term. In the long term, it may not sure. We'll have to see. There's obviously no guarantee. But yeah, no, I really like your picks. A lot of them are companies that could very well do very well in the future and are trying to shape and change the world. I had an interesting thought. I feel like a lot of your journey, right? So you did computer engineering again, which is a male-dominated area, and it's also quite technical, right? And you got into technology, and then now you are also investing. So I wonder if a lot of your, the experience that you've got from your job and the fact that you did a computer science degree has allowed you to be comfortable with learning how to invest and things like that. What do you think? Because I
can see the correlation there. Because I've always been a learner and not scared to delve into technology, and a lot of the things I started off with, things that I use in there's antivirus, internet cyber security, all that kind of thing is kind of related. So I have that in computer science anyway, so it kind of translates to some of the stocks that we're looking into. So I can see the correlation, especially in crypto as well, because I already believe in a lot of the technologies, and can see how DeFi can make a big change. So it does probably made me be more attracted to learning about those kind of things.
Yeah. I think there's definitely something there, and I think because with computer science, I think a lot of people get respect. I think law degree, medicine, computer science, business, finance, and then there's probably a few others, architecture. Sorry if I've missed out your degree, but a lot of those ones are particularly really challenging, especially coding. I know for a fact a lot of people, I've tried coding, and it is tough. It is hard. You have to have a lot of grit about you to get over it, and just continuously learn and get better and try and go over the hump. And I think with investing, it's kind of like a similar thing. There's a lot to learn. I don't think investing is particularly that hard. When I say that hard, I mean once you learn the terminology after a while, you kind of get it. Of course, at what price to buy and what price to sell, that's extremely difficult because nobody can predict the future, right? But in terms of just understanding how to invest and stuff like that, I think after a while it's not as difficult as for me personally as coding. I don't think I think coding is enough. It's another level. It's technology is it's just crazy. So I think that there's definitely some insight. Very, very interesting. Wow. Cool. So, out of your stock picks, which one is the companies that you're most confident will do well out of the ones that you've
You can
chosen?
never really be
It's
confident.
true.
I think for
Mm-hmm.
me, my index fund is what I'm more confident with. That's the majority
Mm-hmm.
of my portfolio. The rest of them,
Mm-hmm.
obviously, I've done my research on the company. I consider, like, Apple, Google,
Mm-hmm.
Amazon, Tesla, those kind of companies I'm fairly confident in. But you can never,
Mm-hmm.
when you're picking an individual stock, you have
Yeah.
to know that there's risk that you're going to lose your money. So,
Yeah.
you can never be confident in it for 100%, really.
Yeah, I agree. I agree. And that's the essence of stock picking. I think the
Mm-hmm.
truth is that anytime you can lose a part or all of your investment, which is
Mm-hmm.
why everybody should be investing in an index fund
Mm-hmm.
or ETF. I would say as the bulk of your portfolio, and
Yes.
then the rest of it is like individual stocks if you want to dabble into it. But I
Mm.
think especially for beginners, you should start with an index fund or ETF. That's what I started with. I started with
Absolutely.
an index fund myself with Fidelity. I think, or was it ETF? It might have been an index fund. I can't remember now. I think it was a few different index funds,
Mm-hmm.
and I started on the Fidelity platform. And yeah, like it was okay. Like it wasn't, I wasn't worried about. I didn't lose like significantly. I made a little bit of money,
Mm-hmm.
and it was relatively stable. So that's why we always say like that is definitely the best approach to starting your journey
Mm-hmm.
in the stock market. Um, so have you read like most of like the most, famous investing books? Like, so you've got like The Intelligent Investor, you've
Yep.
got you've read that?
Yep.
Yeah.
I've read that.
Okay, you've read that. Yeah, that one's good. It's so detailed.
I know. It took me a long time. I kept
Yeah,
restarting
me
it.
too. Yeah, me too. I was like, wow, this is so detailed, and it's written almost in old English type of way
Mm.
sometimes. Yeah, so it's not that easy to understand. I was like, raw, like I understand like what investing is, and I was reading this thinking, oh my god, like imagine like a complete beginner. They're not gonna like get this, but I'll
Yeah.
still say get the book anyway, because
Mm-hmm.
once you do get it, you can start to understand it a bit more. Um, and then there's the common
The
book
little book
of
of
investing.
little
Yeah, that's
book to
it.
common sense invested. Yeah.
Yes, that's it. Yeah, have you read that one?
Yeah.
I haven't read that. That's on my list. I want to read that. And that was from the founder of
Vanguard.
Vanguard, right? Yeah.
Yes. Jack Bogle.
Yes.
John Bogle.
Okay. Yeah. Yeah. That was it. Yeah. And to the listeners who've never heard of Vanguard, Vanguard is essentially like a fund manager. So it's essentially a place where you can they create different index funds. They also have exchange traded funds. So they're basically also like an investment platform or broker, online broker as we call it. You can basically invest with them. You can invest into different ETFs or index funds through them. And the founder in this book, I think they were the first one to create
Mm-hmm.
this index fund thing, because essentially what he was saying was, instead of trying to find a needle in a haystack, so what he meant by needle is, instead of trying to figure out what company is going to do the best, so investing in one stock or a few stocks, you just buy the whole haystack. So you just buy a whole index of companies basically, and that way you should win in the long term. So yeah, very very interesting. Um,
Yeah, that's
so
my platform of choice. I'm a Vanguard.
Vanguard. Your Vanguard as well, yeah, yeah.
Yeah.
I'm not onto the. I like Vanguard. I do talk a lot about Vanguard. Why did you choose Vanguard out of all the other
Because
ones?
when I did my research, that fund I kept coming to the same FTSE Global All Cap, and I was like,
Okay.
why don't I just go directly to Vanguard instead of going to
Mhm.
HL or whoever it is and paying more money? Just go straight
Yeah,
to them. It's low cost, and
yeah,
that's the reason why I chose it. It's easy to use.
yeah.
It's not an app, so I wasn't always constantly checking it. Like, you just
Hmm.
automate and forget about it, really. So
Yeah, yeah, yeah. I agree. I agree. And that's the thing. I think like I've got an investing app, but I don't even really check it that often. I used to check it often, and it's unhealthy, to be
mm-hmm.
honest, because you don't. It doesn't matter. Okay, I check it today, but I'm not selling today. I'm looking 5 to 10 years time. So what's the point of looking at it? So you're probably, like you said, it's best to just automate it and just delete the app. There's no point of even looking at it, because what you're gonna do is gonna cause you to panic sell or panic buy when you
So,
don't need to.
yeah, I do check my individual stocks quite more often than my index fund, but I've got used to it now. But in the beginning, like, you know, it's like, when you first learn, you're like, I'm panicking, like, sell.
Yeah.
So I think but it's good though, because you learn the emotions of it. I
Yeah.
think it's all, for me, it's a learning curve. Like, in the beginning, you do madness, but by the time you get used to it, you understand the psychological nature of it, then it becomes second nature.
Yeah, exactly. And I think you're right. And this is what I always say to people: start off small so you can practice, right? Because you need real life experience. It's like anything in life, right? Like a job, right? Like, you couldn't just become a project manager. Somebody say, okay, your first role out of university, you're just going to become a project manager. That would have just been throwing you too much into the deep end. It's the same with investing. You just need to start off small, really small, and then learn the different things. You know, you will make mistakes. That's just normal. That's just life, right? You know, that's how you improve, right? And you will give yourself time to understand what's happening, feel the emotions, like you said. And yeah, I think for me, the thing I've learned definitely in this season of investing is patience. I've realized, wow, like, if I'm just patient and I don't worry and all I'm thinking about is 5-10 years time, I'm not panicking. I'm just like, okay, whatever stock market is doing, it can do what it needs to do with the, the war going on, but it doesn't bother me. I'm just gonna, I don't care until 2026 to 2030. Before that, it's not my business.
Exactly.
Whatever kind of thing, you know what I mean?
See it as an opportunity to get it at a low price. You're getting it at a discount because of the situation that's happening. So it's win-win for me.
Yeah, no, I completely agree. The investing, I think personally, investing is like 80% mindset, or even 90%, and then 10% doing it, really. Okay, so we mentioned a few things here. We mentioned index funds, we mentioned exchange traded funds. So can we first break down what is an index fund?
So an index fund is like a investment vehicle. It's a pool of companies that are basically mimic a particular index. So it could be FTSE, it could be NASDAQ, it could be these are all index, by the way. It could be anything that is trying to mimic a particular index. So with index funds, they are traded once a day, whereas with ETFs, exchange traded funds, it's traded throughout the day and can go up and down throughout the day. So they're pretty similar, and they both track the performance of either an entire index or a portion of it. But they're basically just pooled investment vehicles.
Yeah. Great explanation. And yeah, I agree. I think index funds and ETFs are pretty much the same. It's really almost like a personal choice. Of course, the major fund managers are the ones who normally offer index funds. You've got Vanguard, you've got Fidelity, and then you've got a few others. iShares as well, which I think is linked to BlackRock, I believe, off the top of my head. So. So they're all pretty much similar. So you can have like B said, you've got an index and mimic an index. So for instance, Standard & Poor's 500, which is the 500 most valuable companies in the US, you can invest in this investment pool, which would invest in all of these 500 companies. So it's really cool. You don't have to, it takes off the pressure from you having to know and understand which companies to invest in, and it just does it for you. So yeah, it's such a powerful investment, I think. Great explanation.
And what I like about them is the self-cleansing. So you don't have to worry if one company just like fails or tanks, it just takes it out, puts something else in there. You don't have to worry. It's automatic.
Yeah, and that's what I like about it as well, because like with the S&P 500, as Tesla was doing very well, and that got into the S&P 500, now you've got Tesla as part of your portfolio. You don't have to, figure that out. The performance will figure it out for you, essentially. So, Yeah, nice. So cool. So cool. So I wanted to go through, some more basics of the stock market. What would you say is the best way for a beginner to start their journey of investing in the stock market?
Um, so for me, I would say there's a list of things to do before you start investing. Um,
Mm-hmm.
and I would say it's to get your personal finance in check. So, but eliminate
Mm-hmm.
bad spending habits. Make sure you've
Mm-hmm.
got a budget. Like pay off your
Mm-hmm.
high interest debt. There's no point in having high interest debt and you're trying to invest like that. The first thing I say get rid of because it's kind of counterproductive.
Mm-hmm.
Build an emergency fund so when you're investing, you're not desperate for money, and you're not going to pull
Mm-hmm.
it out quick and you haven't given it a chance to grow. Um,
Mm-hmm.
and I also say just set clear goals so you know what you're investing for. You know your time
Mm-hmm.
horizon, things like that. So that's what I would say to do
Mm-hmm.
before you start investing. And then when it comes to investing, I always say start with an index fund, as you said as well. I think that's the best
Mm-hmm.
place to start as a beginner. Um,
Mm-hmm.
Invest in company if you're going to pick stocks, individual stocks. Invest in companies that you know, so understand the
Mm-hmm.
company. The reason why you're investing in them. It's really important to know that
Mm-hmm.
you own part of that company, so you
Yeah.
have to be quite confident in them. So buy good quality ones, and then obviously I would say think about long term when it comes to investing. So
Mm-hmm.
obviously when I started in the pandemic, I did a short term one and I did long term one. So I used that because it was an opportunity. I knew that a lot of the stocks were depressed. It was artificial because of the pandemic. So I
Yeah.
wanted to save my house deposit. So I kind of said to myself, okay, I'm going to give myself about a year to do short term and save some
Mm-hmm.
money, and then the rest, then concentrate as well. Then my long term one. So just know what your goals are, know your time
Mm-hmm.
horizons. That's what I would say.
Yeah. Yeah. I completely agree. I think, yeah, all fantastic tips. And I love that you said that you need to get your financial house in order before you start
Yes,
investing.
yes.
Yes, it's very true. Very true. You cannot invest if you don't have an emergency fund.
Mm-hmm.
You are constantly in debt. You're struggling to make, your essential payments.
Mm-hmm.
Investing is not the place for you. You should only do it when you are in a good place, and that's fine, right?
Mm-hmm.
There's no rush. The stock market is always going to be there, and
Exactly.
now we have the crypto market too. So
Mm-hmm.
and then in the future we might have something else. So investing is always going to be there as a form.
Mm-hmm.
So there is no rush to do any of this. There's not even no rush, even if you are in a good place. Again, that's why I say start slow so you can understand it. So yeah, no, I completely agree with B. And it's crazy because you also said invest in companies that you understand, because a lot of people get their tips from like online, Twitter,
Yes.
Tesla, everybody should invest in Tesla. And nothing against Tesla. I'm invested in Tesla. I had my reasons.
Mm-hmm.
That's why I invested in Tesla. Not because of the hype and not because of anybody else. I decided, okay, this is what Tesla means for me. This is the metrics that I like that they achieve. This is
Mm-hmm.
how I think they're growing and stuff like that. And I was like, okay, cool.
Yeah.
I'm now comfortable, going into Tesla, so I understand why I did. It's not I'm investing in Tesla because somebody on Twitter told me to
Exactly.
invest in Tesla. No, that is definitely not the way. And also, it's not the way as well listening to this podcast and saying you're going to get your stock picks from our podcast, because that's not the point of it, right? We're just giving you insights. We're trying to give you an understanding of how we've made these
Mm-hmm.
decisions, but you can make different decisions, and that's okay, right?
Yeah.
We're all different. We're not all supposed to be the same. I don't offer a stock picking service, and I'll never offer a stock picking service because nobody knows the future. That's the truth, and I'll be honest. I've always said that, right? Anything I do, and B's also maintain that as well, which is why we say it's not financial advice. Even financial advisors, even for them, it's difficult because if they could do it, they would just do it for themselves,
Exactly.
right? So nobody has the crystal ball. That's the truth, you know. And if they are really good, they normally do it for themselves. Like that guy who tripled he's now a billionaire. The UK guy, he's some billionaire UK investor.
Who's that?
And he doesn't trade. He doesn't invest for anybody else. He only invests for himself. Apparently,
Who's that?
he used to. I can't remember his name. I'll tell you him offline. But
Okay.
he used to do it for other people, but now he just does it for himself. I think I can't remember exactly what he said. I think it was along the lines of no pressure. He's happy to take on more risk because it's his money.
Mhm.
You know, things like that,
Yeah,
right?
yeah.
And risk appetite is another thing, right? Like
Mhm.
how much risk are you willing to stomach, right?
Yeah.
For example, because for instance, if you know that you put in £1,000 in the stock market and it went down to £800 and you absolutely hated that and you'd want to sell everything, then investing in stocks is something you should never
Mhm.
do because you're not ready for that, you know. So yeah, investing it takes a lot of time to learn and understand these things. Um, so I wanted to know from your point of view, what are common mistakes that a beginner should be aware of?
Mm, I would say probably not following the hype. So that's a
Mm-hmm.
big common mistake people do.
Mm-hmm.
Not defining your goals. Like,
Yeah.
make sure you define your goals before you go into investing. Another thing would be like not knowing your risk appetite. So
Mm-hmm.
I think these are the things that you should know beforehand, because if you know yourself and you know I'm risk averse, then you go for ones
Mm-hmm.
that are, not, you won't be going into crypto basically. You see what I
Mm-hmm.
mean?
Yeah.
So know your risk
Mm-hmm.
appetite and how much you can stomach your portfolio going up and down, and
Mm-hmm.
yeah, that's it. I think.
Yeah. No, I like that, and those three things are key things, in terms of mindset. Because if you're able to nail those things, you'll understand. Okay, what you're happy to invest in. Like B said, if you if you are like, nah, I don't like risky stuff. Crypto isn't for you.
Yeah,
Stocks isn't for you. Maybe only index funds and ETFs are for you.
yeah,
You know, and that's what. And then you just narrow it down. Like, okay, cool. I'm not gonna touch stocks. I'm not gonna touch crypto. Cool. Okay. So in terms of ETFs, which ones seem to be less risky? And then you're just narrowing it down and
yeah.
making it easier for yourself. Not following the hype. Very very important. You know, there's a lot of, even with the war in Ukraine, there was a lot of things happening in terms of with like oil, with like gold,
Mhm.
with like other commodities, and I'm pretty sure a lot of people would have rushed. Let me
Yes.
buy oil. Oil is
Yeah.
increasing. Let me buy gold. Gold's
Mhm.
increasing. You know, and you know, I think you need to separate yourself. Are you investor or trader, right? Traders, they're happy to do that. All of that sentiment, swing trading, volatility. You know, trading in really volatile times. But investors, that's not how we respond. We
Mhm.
don't say, okay, gold is now going up, let me invest. It's not the right mentality to have. And I was like that as well with Bitcoin. I remember like when I had been investing in Bitcoins before, but I just didn't nail the mentality. When it was going up,
Mhm.
I wanted to buy. When it was going down, I wanted to sell.
Yeah.
Like, no, you're not getting it right. I'm not getting it right. So yeah. So how long do you think someone should invest for?
I'll say short term, about a year or a bit more.
Hmm.
Long term, 5 years or more. So I would say the
Yeah.
longer the pot, the better. 5, 10,
Yeah.
15, 20. The younger you
Yeah.
start, the longer your time horizon can be. If you've got a particular
Yeah.
goal, then obviously like 5 years is good. If you're to say for
Hmm.
retirement, I would say a bit longer. So I'll say minimum five
Yeah.
years if you're doing long term.
Yeah. No, agreed. Yeah, I like the 5 year horizon personally, 5 years or more,
Mm,
because yeah, I think like you said, the longer you have, the longer it is for your portfolio to give you some form of return, if possible. Um, and then what things do you think that you can do that someone can do to increase their chances of success?
Oh, well, my mantra is like always been set goals, make plans, and
Hmm.
take action. So I would say if you follow
Okay,
those
I
three
like that.
steps, you cannot go wrong. So I would
Yeah.
say just make sure you're setting your short term, mid term, long term goals.
Hmm.
You're planning what you want to do, because most of your stuff can be broken down. Break down your goals and say, okay, this is how
Hmm.
long I think it's going to take. Oh, if I want to do it, if I've got this particular time horizon, split it into, a year, 12 months, and see what you can do to deliver that, because that'll just make it so much easier. And just don't be complacent. Take action. Like, I think it took for me to have actual time in COVID to actually take action, because there's loads of things in my head that I wanted to do, and I was thinking, yeah, I'm gonna do this, and then like obviously when you're running around, 2 kids, married or whatever, job, I was like, okay, I want to do it, but I'm not doing it. And then after, with COVID, you're kind of forced to slow down and actually go, okay. So now that's when I took proper actions. Just take action. Just do it. You're not going to be perfect at anything. Just try it. So that's all. Yeah. I will say that will increase your chances of success.
Love it. Action is defo key. Like you just have to do it. There's no point of being scared. You're scared of it happening. It's gonna happen. Exactly. Just let it happen. It just improve, over time. But again, just start small to minimize your risk. So I completely agree with action. And even me, I definitely didn't take action for years on lots of stuff. Savvy wallet, investing, getting out of debt, so many things. So no one's perfect. We all have our time where it happens. I think it's just important not to look back on it and be like, oh, why did I waste so much time? It's happened. Whatever it is, we're just looking forward to see what we can to do. Thank you so much. Okay. So I realized, right? It's okay. So I realized that, I always ask people their financial mistake, and I thought, wait, hold on, but why am I not asking the opposite of that? So now I'm going to start to ask the opposite, because I think it's good to see what was our worst, but then what was our best as well. So I wanted to sort of end it on so what's your greatest financial achievement?
So my greatest financial achievement is saving for a house deposit in 2 years.
Wow. That's fast.
I've been talking about this for, I'll probably say about 5 to 7 years. We've been talking about it. Me and my husband, yeah, we're gonna do it. Constantly trying to save, but they're like, oh no, we got to go on holiday. No, we got to do this. And then 2 years, COVID, saved my deposit, and it's wow. Yeah.
That's insane. Congratulations. Thank and well done. That is a fantastic achievement. 2 years is super quick.
Yeah.
Wow. That is, you see, that's why I asked this question. It's just kudos to you. I'm so happy for you for doing that. And I'm sure that you are happy that you actually sacrificed finally to buy a property.
Yes. Buying the property now, that's a whole different stage. This market is mad. I'm trying to get, we've done so much viewings and all that kind of thing. That's a different story, but we've saved it.
Yeah. You got the money, so you're ready when it needs to happen. Yeah, no, I completely hear that. No, thank you so much. Thank you so much for joining the booth and spreading gems. It's been really great speaking to you, and then we're definitely going to do another episode on crypto. What's next for B?
Well, I will continue my journey to financial independence, buy a property, maybe some rentals, just grow my platform so I can motivate and educate and inspire people, as many people as possible. Basically, that's my goal.
Love it. And I wish you luck on that. I'll be supporting you on the way there too. Thanks. And where can people find you?
Okay, so my Instagram is Investing with B. Facebook, same, Investing with B. I've got a Twitter, also Invest with B. No, Invest with B. Yeah, but I'm mostly on Instagram, so I'll do daily posts. So that's Investing with B. Yeah.
Okay. Great. Yeah, and your posts are fire, and I'm sure. I think you posted today. I can't remember actually if you posted today or not. Wow. Oh yeah, you did. You see, you're on point.
My picture,
Oh, okay. Yeah, you're on point. Okay, I need to go check it out now. Then, you're so on point, and please do follow B. She posts fantastic content. And as you've heard, she's also a fellow investor. I love speaking to my fellow investors too. I do hope that you've enjoyed this episode of the podcast, and we will speak with you next week. See you later.
Thanks. Bye.